Nvda, great company. It's had a tremendous run. It just blew up into earnings. And a lot of people, it appears, have lost money. If you've lost money on Nvda, I hope you'll have 5 or 10 minutes to watch this video. For the life of me, for the absolute life of me, I don't understand why people will gamble thousands of dollars on an earnings call or on a stock and won't spend 99 bucks to spend a month with stockmarketcaddy.com. We don't make specific recommendations to buy or sell anything. We don't necessarily hand out the fish. But for 99 bucks, you'll never look at the markets the same. And better yet, you'll learn how to fish and you'll have some fun. The membership is month to month. We don't ask you to join for a year or 2 years. But the funny thing is, those that do join our private club have been with us for years and years. So take the next few minutes and let me show you why and how we shorted Nvda. Okay, let's take a watch. This is a point and figure chart. When prices advance, they're in X's. When prices are in O's, they're selling. The first thing is, for those of you that are watching charts that you get from the E-Trades and the Schlubs of the world that give you time distorts the price activity. The time on time charts distorts the price activity. Point and figure charts go up and down because that's the way price acts. This is where, at the close, where Nvda was positioned. I'm sorry to say it's not trading there now. Okay, this particular chart, we deliberately turned off the after hours so that you could see this. Based on our programs running on a point and figure, it already told you it was in a downtrend. It already told you it was on defense. It also told you there was a 21 point range. The high watermark was 263. The bottom of the range was 242. This particular indicator is proprietary to us. We call it the SMC for Stock Market Caddy, GPS combined. Do you notice that when price was moving up here and up here, pushing the highs back months ago, how strong the GPS combined indicator was? And look, we were up here pushing up on the highs. Do you see how shallow this is? It's called divergence. Divergence. We even knew how much Nvda was likely to move after hours. Let me show you. And we show this to our members each and every evening. This is the expected move to expiration. Expected move to expiration. Now, that's not based on my opinion or our opinion. I just didn't pick it from outer space. There's actually a formula. Let me show it to you. The formula is expected return equals the close times the implied volatility times the square root times the date to expiration divided by 252. You got that? So we don't have to. We rely upon the options market each and every night, each and every week, to tell us what is the expected move to the next expiration, which is actually tomorrow. Nvda was right here because, see, we sorted. We want to know the biggest movers. And the options market was telling us the expected move was going to be about 4%. Now, it doesn't give us direction, but it tells us that we're going to move approximately 4% at 10.55. $257, bottom of the range, $242. Where is Nvidia trading right now? $244. We shorted Nvidia. We were short Nvidia. I'm bagging on at stockmarketcaddy.com. You probably have learned a few things here. These are our tools to show dynamic range, price up and down, downtrend, defense, a combined GPS combined in showing divergence. This is how a professional approaches his business. He doesn't get caught up listening to the fast money boys and girls every night. Oh, Nvidia, they make a chip, and they're gonna have these cars that drive around by themselves, and so I'm gonna go put my retirement money long Nvidia. That sounds like a good idea, Martha. I mean, because we're gonna have these artificial intelligence too. They're gonna take over the world. Yeah, nonsense. If you are buying stocks, or you are putting money in the market based on a story, or if you're looking, more importantly, if you're looking for a story as to why a stock is down $20, $15, that tells me you're buying stories on the way up. And if you're buying stories on the way up, I'm going to tell you, you are going to lose a boatload of money. That's what Wall Street wants you to do. Give them their money on stories. They tell you stories. You don't make money on stories. You make money by tracking the money flow. Money flow. And you got to know how to trade and what to trade. Not necessarily the symbol. But do you know how to sell covered calls? Do you know how to sell covered puts? Do you know what a collar is? Do you know what the difference between a collar and a strangle? Do you know the difference between defined risk and undefined risk? Do you know what a protective put is? Do you know what a protective call is? Do you know what an equity curve is? Do you know the difference between a win-loss ratio and a profit factor? If you don't, I strongly recommend, and this is the only recommendation I'll make, is that you don't trade the markets by yourself. I don't want your money. I'm not going to trade it for you. But I strongly recommend that you get an education from somebody. I'm Bagger Don at stockmarketcaddy.com. Invite you to call me. Somehow, some way you found us. Don't advertise. I'll give you my cell phone. It's 813-758-8263. Real person. I don't trade moving averages. They don't work. We trade futures. We trade stocks. We trade options. I share with you the approaches that we take. I share with you some knowledge and hope that, like many other of our members, that you will, fly on your own and not make the same mistake time and time again. By the way, if you're thinking of averaging down, don't. Rule number one. If you make a mistake, you make a mistake. You do not make it better by averaging down. That is buying a stock that is going down on the thought that you're going to lower your cost basis. It will just get worse. Never, ever, if you never join us, never do anything for your education, never average down. Good luck. I'm Bag of Don, StockMarketCaddy.com.